Hey, hi, welcome back, everyone. Today, I decided to pick a business within the hospitality industry. I was going through some of the businesses that are listed, and I just noticed that Indian Hotel Company have just announced their results. They've had a very good result, and also within the comments, one of the people who are subscribed, they also requested to go through the business of the Indian hotel industry. So how we'll do it is we'll break it up into two parts. We'll divide the presentation that is submitted by the Indian Hotel Company Limited to the regulator into 30 pages. I've gone through the document, and there are some key pages that I wanted to highlight to really go and dive deep into the business. This would be useful for all those who are probably on the sidelines thinking to invest into Indian Hotel Company Limited, or even those who are looking at some of the competitors like EIH, the Oberoi Group, and the Trident Group, and Lemon Tree Hotels, and Taj GVK, and those kind of businesses. So yeah, that'll be useful for them. So let's dive right in. Um, Within this page, we can see some of the brands that are associated with IHCL. When we say IHCL, we also mean Taj Selections is one of the key emerging areas for the business. Vivanta is present in Tier 2, Tier 3 cities, and just opened up recently in Tawang as well, which is in China border. Ginger has a very high domination not only across metro cities. It just opened up a 320 room key, um, owned totally by IHCL in the Santa Cruz near the airport, and is doing really well. Ama Homestays is also something which the group is concentrating on, and the portfolio is increasing by quite a lot. And Taj Sats is something which is really interesting. So it's into the catering business, so airline catering, and the airline catering is growing at a rapid pace because we are expected to add close to 100 more airports. And I'll discuss more about it when we look at the key enablers for the business, and what are some of the features which should propel the business to a higher stature. We'll also discuss some of the risks and the numbers associated with the business. In this first part, I'll be concentrating on the overview of the business, so the year gone by and how the numbers look. We'll also be looking at some of the financial highlights on page 5, the segment breakup on page 8. We'll also be looking at the portfolio growth in page 9, 10, and 11, going through the performance highlights in page 22, and some of the city-wide stats and international hotels, how they're doing, and those kind of things. So let's quickly go through them. Within page 3, we can see that some of the numbers that are being presented here. And Taj Hotel as a business is doing quite well. During COVID, people thought that it has sounded a death knell to the business, but what has really happened is can be correlated to what is happening in Singapore, where the rentals are really increasing. During COVID period, there was not enough construction happening, and because the construction was not happening, a lot of the people who were renting out the places, the prices for the real estate had really gone up, and those were put up for sale. Because it was put up for sale, the rentals really rocketed in Singapore. And something of a similar kind is happening within the hospitality industry, because during the COVID period, not a lot of construction happened, and not a lot of new supply for hotel businesses got built. And even hotels across, what we're talking for Taj, where the average revenue per room is in the range of 12,000. So within this segment, even less so. So because of that, the supply and demand, there has been a huge shift. In terms of demand, I think even within the metro cities, what has happened is a lot of big convention centers have been added. Yashobhoomi in Delhi, and the place which also hosted the G20 in Delhi. And within Mumbai, we have had the Geo Convention Center, and a huge convention center opened in Calcutta as well. So right now, any big conference that happens, a global pest conference just happened in Mumbai, and 6,000 people were present to attend it. So once these guys are present, and CEO of some of the largest pest control companies do come in, they're looking at premium luxury hotel segments, and the hotels really get booked out. So even within the metro cities, there is scope for further opening of hotels. Taj Hotel, in a way, if you see here, they have done one signing every week in FY24. So kind of they've done, if they're 52, 53 weeks, they've signed 53 hotels in a way. Even within these signings, there's a very crucial part which we need to understand as shareholders or somebody who's looking to invest, is that the the goal of the business or the goal of the management is to really shift it from a capital heavy intensive business to a light capital light business. And how is it making it capital light is through management contracts where it enters into lease agreements uh, with the owners of the property. So a lot of the properties, they're not building it out. So as we go along, we will see how the shift is happening from it being a capital intensive business to capital light. In the 6 point, that's one unique mix of capital heavy and capital light, and that's what they mean. They mean that they're looking to move the business more towards management contracts. And we will see in, I think, some of the recent hotels that have opened up in this quarter and in the year in the next part, as to how whether they are IHCL owned or those are management contract, in a way kind of franchisee businesses. So so uh, the business really holds a market leadership. It has a commanding industry premium of 65% of average revenue over and above its competitors. The numbers as such, the profit after tax has grown by 17%. Uh, s- PAT has grown by 26%, sorry, and EBITDA margin is at 33.7% for FY24. Um, yeah, so this is going to be interesting as to see how the movement from capital intensive to capital light business really plays out into the numbers of IHCL moving ahead. Um, so moving to page 5, here we see the financial results that were announced. So in all the numbers, we see that there has been significant uptick. We have seen that the PAT has grown by 26%, is standing at 1259 crore compared to where it was a year back. So on the left we have the consolidated FY number, and on the right we have the Q4 number. So the strongest quarter for the hotel business is really the Q3. That is when the December business is, and November December business is, and a lot of NRIs are flying into India, and they kind of prefer the premium segment of Taj to do their stays in. A lot of demand is also being picked up because of some of the global events that have happened. IPL is a major contributor to the numbers as well. Any event like the Miss World and events like these, the stay that the contingent do prefer is definitely some of the big hotels. And I'm not saying it's only Taj, but yeah, Taj contributes a major portion of it. So here, if we see what is the domination, so here we have the revenue per average room, and here we see that all India, the industries, the Taj Hotel is above 65% above what the overall all India average is. And here is a breakup by each state, and we see that Rajasthan is charging huge premium, and this is because the portfolio of palaces in Rajasthan is huge, and hence the numbers of the average room rents in Rajasthan is also close to 52,000 per night, and because of which the premium that Taj charges over its competitors within Rajasthan is at such a higher level. Here we'll see, I think, what the breakup by city is. So we see that what are the breakup of luxury, upper luxury, mid scale, and what is its presence across each price point. So we see that luxury is highly concentrated within Rajasthan, and some of the most premium properties are within Rajasthan. Within upper and upscale, I just discussed about 320 room Taj Ginger, which opened up in near the airport, and it's doing really well in terms of occupancy and average room rent as well. Um, yeah. In terms of the portfolio growth, what we're seeing here is that there are 218 operational units currently, and 92 are in the pipeline. So in totality, 310 distinct hotels which IHCL will own, and this is the breakup into the various segments. So Taj definitely the dominating brand that it is, and then there is Vivanta Selections 96 units, and Ginger 90, and 14 for the other one. So here as well, major new opening or the ones in the pipeline will be from the management contracts, and will be from the ones where the requirement of capital will be quite light. But yeah, it'll be interesting to see how those numbers then begin to change for them. So here we see that one new hotel is signed every week. So there is huge demands for luxury segment. And even when we talk about the penetration, right, we see that the average GDP income for India, average per capita income for India stands at close to 2,500 to 2,900 range currently, whereas that for China is around in the $12,000 per annum range. So from here, we should see an uptick in the per capita income, whereas the penetration is very low for luxury segment hotels in India. For China, if you compare the luxury rooms available for China compared to India, China has 40x more rooms compared to what India has. And it'll be interesting to see how this pans out and how this segment in particular pans out. So this is the part I was talking about. What is the difference between the operational portfolio and what the total portfolio, including the pipeline, will look at? Even at current levels, we are doing a profit of 1,300 crore. What I don't like about the business is that the price to earnings is on the higher side. It's in the 62 range, 62 for price to earnings, but it's really a question about whether it'll be a compounder, it'll be a heavy compounder, and it'll be able to generate alpha. According to me, and it's my humble opinion that this should not be generating alpha, but this should be generating close to 50-20% CAGR moving ahead. But if you're talking about some of the businesses which are generating alpha within the stock market, a business which is generating 15% compared that to a business which is generating 26% is a huge delta over long periods of time. So suppose I pick up this stock and I hold it for 20 years and it is generating me 15%. So um, for it to double, it'll take significant amount of time. Whereas if there is a stock which is generating 26%, the doubling should happen within 3 years. And if we look at 26%, within 21 years, it should give 2 to the power 7. Whereas a stock like this with a high PE, it should not be generating that huge alpha. But definitely, I think the stats for this business is quite impressive, and it'll be interesting to watch how it pans out. But so here, as we see, 60% for capital light and 40% for capital heavy, which is then 40% is going to reduce to 28% for the total portfolio if you include the pipeline, and the capital light should increase to 72% if you include the pipeline. So we'll quickly jump to the performance highlights and how the numbers are being contributed and what is contributing to the numbers. So we see a total revenue of 6,952 crore in FY of 24. And the other income is contributing 183. I'll need to go deeper into and try and understand what this other income is, but we can have a look at some of the other contributors which are there. So room revenue is contributing 3,392. So that is 50%, almost 50% of what the total revenue is. And this has seen a 19% uptick compared to last year. The food and beverage revenue is 2,386, which has seen a 12% uptick. Management fee, which is coming out from the management contracts, has seen a 17% uptick, and this should continue to rise as more and more properties come under management contracts, especially in the AMA segment, which is to do with homestays, where Taj is doing a lot of tie-ups with individual homeowners and giving them a management contract to run the business. So, and the other operating income stands at 522, which has seen a 23% uptick. So in total, the total revenue is 6,952, which has seen a 17% uptick, and the PAT in totality stands at 1,259, which has seen an 18% uptick compared to last year. So these are quite impressive numbers, and we'll also delve deeper into the cash flows and the free cash flows that the business is generating, and the business is able to fund itself for the hotels that are being opened up. Not saying that they do not have debt on their books, but they have a huge amount of free cash flows also to service that debt. So we'll quickly jump into the city-wide stats. What are some of the big numbers that are coming in and how each city is picking up in terms of. So here we have the occupancy percentage. And we have the average room per rent, and this number is occupancy percentage divided into multiplied by the average room rent, revenue per available room, and this is one of the statistics that is being analyzed by hospitality industry professionals or analysts who are studying hospitality industry share. So definitely we see within Kolkata, we have seen like a 10% increase in occupancy, and this might have something to do with a pickup in business uptake, or but would need to go deeper to try and really understand why this is happening. Within Bangalore, we see that the average room revenue is undergoing some pressure, but overall there's been a 7% increase in ARR and a 14% increase in revenue per available room, so which are good signs for the business. Some of the international city-wide statistics. While analyzing this talk, I also heard a lot of management commentary, and I did hear from them that the primary focus is India. They're looking inward, and most of the capital deployment that happens would be happening within India. International destinations are important, but as you can see, as the where we are seeing a huge uptick in the India numbers, here we are seeing slightly muted numbers. So we are seeing an occupancy rate increase by just 3%, whereas the average room per revenue per room is decreasing by 3%, and revenue per available room is just increased slightly by 2%. These businesses will kind of benefit with due to the network effects of Tata acquiring Air India, and there will be a tie-up, kind of like corporate tie-up as well as to Air India flying in directly into some of the destination where Taj is present. So that should aid well and bode well for the company. Here also we have performance of the key legal entities. Here we have Taj Sats, which is if you've flown Vistara, you would have seen these trucks providing hot food for the airlines, which are not budget airlines, and we can see that it's generating a revenue of 900 crore in this year, which has been a plus 40% jump from the prior year. So aviation sector is really picking up, and there are going to be additions of 100 more airports in the coming years, and that'll be interesting to watch as to where this goes. Oberoi also does its own catering business, so it'll be interesting to see how these businesses really compete with each other. Talking about free cash flow, so here we have a view as to how much is the free cash flow that is being generated by the business. We see that from cash from operations is standing at 1738, other income at 128, and after we reduce all the expenses, the gross cash on the books is standing at 2206, and we have a free cash flow of 1162 crore, which is quite significant given that the profit itself is standing at 1200 to 1300 crore. So it'll be quite interesting to look at the second part of the analysis. But yeah, that's it from my side for the first part. Do mention in the comments below what are your thoughts on the business, some of the things that I presented. What are your view as to where the hospitality industry is headed? In the second part, we'll discuss a lot more about some of the other factors. We'll discuss about the balance sheet performance, what are the performance of Ginger, the Ginger entity, and also look at individual performance of Ama and Cumin and how Taj Sats is performing at an individual level. We will also look at some of the key growth enablers in the next section. We will also look at segment stats and the planned hotel opening in the next part of this video. We'll also look at some of the risks which is inherent within the business and how increase in supply could really challenge the domination. But Taj being a brand of huge repute, brand awarded left, right, and center in all the hospitality industry awards. Yeah, we'll discuss more about it in the next video. Until then, thank you. Take care. Bye.